Let us take it with all absolute seriousness as we do for every event and meeting that we take, because I believe it's going to be of a great blessing to us from where I believe we come in from. When you read through the scriptures in Jeremiah 29, when the Bible talks about God says, I know the plans I have for you, the plan that of good, not of evil, yet to take you to an expected end. When you want to reflect on that scripture, now be a lay person, if you're not careful, it means that you might not even want to do anything for your life because God, the Almighty God says, I have a plan for you. And that plan is good. But that is what it means per se. God means that definitely has a purpose for us, he has a plan for us, but we need to receive great wisdom from him to be able to work in his plan. And one of his plans for us is that it shall be well with us here on earth. One of his plans is that even when we are not in existence anymore, we have transited even into heaven, we'll be able to leave a legacy in quote behind. We'll be able to ensure that life for our dependent will also be well, so it's not just for the now, but also for the future to come. So planning in every stage of life is good. In fact, God himself plans for our life, and he expects us to also plan. That is why in Luke chapter 14:20, it says, suppose one wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it? So God is expecting us to plan. Nti ade bia mu a yeye bia no, ewade hwe kwan se yenso ye be den, ye be plan, ye be siesie, we ye be de niema e be den, e be tutu iye. And therefore tonight, as we have met, our desire and our aim is to talk about what they call life insurance. And obviously, God is our ultimate insurance, our protector, and is our everything. But there's one thing that we know. The insurance of God for us on life does not include living on life forever. There's going to be a time, appointed time, where we will all transit and go to be with the Lord. And therefore, whilst you're on earth, there's the most importantly, we need to understand and to know that we will plan for our lives as we live here. And then obviously, God takes care of our plan, our life after our existence from here. Indeed, I was reflecting on something and realized that the system is wise sometimes. That's what the Bible sometimes tells us, that we should be shrewd in the way we deal with things. For example, some person will talk down with Krumwa. If you don't have a mortgage insurance, there's no way a bank will approve of a mortgage for you, because they know that if anything happens to you, at least with the mortgage insurance, they'll be able to get their money. They'll be able to sort themselves out, whilst you also sort yourself out. Life insurance has become very important for us. And many at times, as people from African descent, majority, normally we don't take some of these things very, to heart a lot, and we leave it to bear when issues and situations happens, then it becomes a problem. That's why tonight we have gathered, and we are praying that the Lord will help us to gain understanding from our two lovely ladies who will be taking us through what they are prepared for us. But Proverbs 15:22 says something that really touched my heart. It says, plans fail for lack of counsel, but with many advices, they succeed. Plans fail for lack of counsel. And the reason why this particular scripture has me, nipa insusie timi basa nkyerɛkyerɛ enimo, in other words, futuo enkanwa. Now, because I was talking to somebody, and you know how people can talk from their mind as if they know it all. I saw your investment too. I saw your investment. I saw your investment. They mentioned the big word investment, but then sometimes they don't even understand the details of how to go about investment and anything. Sometimes they saw but they don't understand. So they don't understand. Plans fail for lack of counsel. So these plans are in the heart of people. They need to invest. They need to secure their children's future and all that. They are in the heart of people, but without counsel, without a proper channel of advice, it might all not succeed. And that is why tonight we have gathered. Finally, Ecclesiastes 3:11 says, there is time for everything and a season for every activity under the earth. So we should bear in mind that there will be time for birth, time for death, time for anything under the sun. And it's interesting to know, for example, when the royal family, they've given a new royal comes out, or a new prince or princess, whichever, straight away endowment funds are created for them and all that. And most often than not, as believers and Christians, we lack in understanding of some of this. There are times for everything. I pray that tonight, as we have gathered. Erade mboa ye na anwumre na yenya odom yenya nimdia afa ye kofie ne ye abusua tenase a ye betumi dia ye adwuma na ye bo ye abusua ehu ban hu na mafam na say erade so bekoso abo ye hu ban obviously hu mafam and hu na mafam as well. And I pray that tonight's session shall be a blessing to all of us. In Jesus' name, amen, amen, amen.
As you all, at the moment, I'm a freelance agent and I work with a company called Genostar, and we are a financial education company. And one of our core products is life insurance. So, as Pastor said, I'm just going to go through the basics of what is needed, and then if there's any extensive question, you can ask me later. So life insurance is a financial product that enables you to leave behind money for your family when you die. And this can be used to support them for a number of years to replace lost income or to pay off a large debt such as your mortgage. And you pay a monthly premium for life insurance. So your age, your health, lifestyle, your age, your health, your lifestyle, and how much cover you need, as well as the type of policy you have, will all determine how much you pay. It's, life insurance, how much you pay, it will depend on fear with the like the lifestyle you lead, mostly, you're more like they smoke, and they be the job type you have, if it's risky or not. And that will determine how much cover, like how much you pay per month, and also the amounts that you want to be covered for. It's all determined. Since you be already 30, another person's already 40. But even if they're having the same cover, because of the age difference in their way, the one who is older will pay more than the one who is younger. So that is basically that. And then why do you need life insurance? So my CEO, he has a famous quote that says that you don't buy life insurance because you are going to die, but because those you love are going to live. That means to say, and yes, I will talk because you are going to necessarily die, which we are all going to anyway. But money, the people that depend on us really would benefit from that. So one of the reasons why life insurance is important, because most of the time, if you are working, you don't have like a large cash reserve. You don't have like a massive bank account there. So if you don't have that, then taking life insurance ensures that your family is financially protected when you pass away, so that they are not left, especially, it doesn't happen here a lot, but back in Ghana, is that somebody has died and their children are left off and they don't have anything, and you see that people who were had affluent parents are now living like paupers because they don't have anything to depend on. It's also a way to pass down generational wealth to your children. It's also a way to pass down because it's a huge lump sum of money, which you might probably don't have. But because you're paying little by little, it is a way to ensure that, imagine that you're passing away and passing on like maybe 100,000, 200,000, 300,000 to your children. It's a way of sending on generational wealth and provides financial freedom for your family if you are not around. And so there are different types of life cover. There's accidental death cover, there's death in service, term cover, and whole life cover. And so I'm just going to go through each of them. So accidental death cover is in its name. It means to say, if the accidental death policy, it only pays us when your death has been caused by accidents. And if you have this type of cover and you die naturally, say by sickness or something, it will not pay for you. It will only pay when you have been killed by an accident. That's the only way. by car or by any form of accident. That's the only way this type of cover will pay your family a large sum. So this type of cover, it's usually taken out by people or more like very high risk job, like those who drive truck drivers and so on. Their job is dangerous. So usually they take this type of policy to help them out. And occasionally people may have this type of cover without realizing that it only pays. So it is usually good to check what type of life policy you are taking out to make sure that it is the right one for you. And death in service, this type of cover is linked to your employment. So sometimes some employers will give life insurance to you and it's paid, they take it out of your salary. So it is usually around 3 to 4 times your salary. So if you earn an annual salary of about 20,000, it will be about 3 times, which is maybe 60 or 80,000. So this amount might be enough if you are a single person and you don't have any dependents. So that should be fine. There are pros and cons with every type of life cover. So this one is really cheap because it's your employer that's giving it, so it's really subsidized. And then the negative about this type of cover is that should you lose your your job or move from one job to another, then this type of cover will cease. So for example, if you're working and you're young and your employer is providing it for you, because when you're young, life insurance is cheaper than when you're older. So should you leave your job maybe after 10, 15 years time when you're older, you may lose your life cover, and going to take an extra, a separate life cover may be expensive. So it's really advisable that even though you have death in service, like in your workplace, it's advisable to take a private one just to top it up so that in case of eventualities, you are covered, your family is protected. And then there's this one is whole life cover. Whole life cover, it's a policy that lasts for the rest of your life. So you buy it and you pay it till you die. And then this one, it's guaranteed. So as soon as you die, your family is guaranteed to receive that type of the lump sum of money that you are leaving behind. So the positive aspect is that the payment is guaranteed. Your family will receive a payout when you are not here. But the negative is that because it is a guaranteed payment, they are quite expensive. The monthly premiums are very expensive. But then, so if you want a whole life cover, you need to calculate what how much you can afford and how much you want to leave to your children, because that one is guaranteed. Even if you live to 100, your family will get something. And then term life cover, this is the most common type of life cover. It ensures, it's a term life cover is an insurance type that covers you for a fixed period of time. So if you're diagnosed with a terminal or die within the fixed term, then you would receive a lump sum. So usually people would cover themselves for their mortgage. So if your mortgage is 25 years, then you take a term life cover for 25 years, so that within that 25 years, you are covered. Should anything happen to you, then your mortgage will be paid off, so that your family don't have to struggle because they've already lost you and lost an income. So that is where it's similar. Some people also take it to cover them till their retirement, because that is when because the assumption is that by the time you reach your retirement age, your children are already grown, they've left the house, they're not dependent on you. So should anything happen to you, they are covered. So that's that. So premiums for term life insurance are calculated, as I said earlier, on your age and your general health. So the older you are, the more expensive your premiums are. This is because the chances of you falling ill or dying increases with age. So the positive about that is that term life insurance is more affordable, as the insurer covers you for a certain period of time. It's more affordable. And the con is that the negative is that it only covers you for a period of time. So if you take out for 25 years and after the 25 years you are alive, then hopefully you have some savings to save for your children and your family. So it will not. So that is the idea. The idea is that as you're taking it, you're also investing so that your children will have something. So that by the time your term life cover expires, you still have something on the side. And so term life is the most common one, as I said earlier, and it also has different types. So that's the decreasing term. The first one is decreasing term insurance. So this one is typically used to protect mortgage repayments. So the amounts you are covered for decreases in line with your remaining mortgage amounts. So if you take a mortgage amount of £200,000, then you take a life cover of £200,000. As you are paying your mortgage, your insurance also reduces with your mortgage. So by age, maybe if you pass away in the 15th year and you possibly have like £50,000 left on your mortgage, the life cover will only pay £50,000. So that is how decreasing term insurance is. So it's usually cheaper as well because as the value reduces, the premium also reduces. So is that one. So some people also are not aware that this is the type of insurance they have. They may think I have 200,000, and by the time anything happens, you realize that it's not 200,000 you have less than that. So you need to check if you have life insurance. You need to check if it's decreasing term insurance or not. And then the second one is the level term insurance. As the name shows, it's level. So if you take it 200,000 from the beginning to the end, it stays the same. It doesn't have, so people typically choose this to cover them till their retirement so that their family can be protected should they pass away before then. So the amount stays the same. If it's 30 years, it stays the same throughout the term. And then the other type is also increasing term insurance. So this also helps because of inflation, because if you take out £200,000 for 30 years, in 30 years time, the value of £200,000 may not be as valuable as now. So increasing term ensures that your money increases with the inflation, so that even though it's 200,000 now, maybe in 30 years time, the value of 200,000 may be like 400,000. So you'll be paid. But this one is also expensive because you pay according to the inflation of the year. So that's the different types as well. So the things that you need to consider is that when your term life insurance plan expires, your monthly payments to the insurer stops and you're no longer covered. So if you took it out to your retirement and retire at the age 68, then the term insurance will expire. Then your monthly payments to them too will stop. So if you don't get diagnosed with a terminal illness or die within the fixed term, then you do not receive any pay. So you do not receive any payouts with this particular one. So the idea of this level term is that you protect your family whilst they are young and depend on you, so that by the time you retire, they are no longer dependent on you. So should you pass away, they will not be financially affected because they are older and they're already working for themselves. So that is those are the things that you need to bear in mind when taking our life insurance cover. And then there's also sole cover versus joint cover. Into sole cover is for just one person, and then joint cover is for two people. It's for maybe if my wife or we take a joint life. So the fact that you are married doesn't mean that you need to take out joint life cover. You can each take single sole covers each on your own, because the difference, let's say, the sole life covers an individual and pays us on the death of that individual. It's only like your partner, not only like that's both of you are on the sole cover. You pay separately, maybe you share £20, the other person also share £20. And then when nyame to nsa frɛ nipa baako a, then the cover will pay for that person. So if the cover is 100,000, then they will pay for that person. Yeah, and then that person's policy will stop. However, the other partner will also still be covered. And it does not because and also they will be covered and the premiums will still be paid so that the children will also be covered. Yeah. And then the joint policy, it comes in joint names. And then one premium is paid and you're not paying separately. It's a one premium is paid and for £40 instead of 20 pounds. And it's only it will only pay for one person. So I'm trying to explain this properly so that you get it. So with the joint policy, if it covers the both of you and it's for £200,000, you probably be paying about £20 a month for it. For the two of you, it's not separate. One premium is paid for both of you. Then when one person dies, they'll pay the £200,000 to that person. And after that, the policy will stop. The other person will not be protected. So the other person will probably have to, if they want to be still protected, they have to then go and take a different policy on their own. Yeah. But with the sole cover, so when the other person isn't away, the other person's one is still in place to help the family if they need to. So that is the differences. And then usually when you take out a life insurance, they can also offer you critical or serious illness cover. And this is an insurance policy that pays a lump sum to you. It pays a lump sum to you if you become seriously ill and can't work. So you can use the money to cover any outgoings while you take the time to recover. So most policy providers will cover illness like cancer, heart attacks, and strokes. They may also be an option to add specific illness to your policy. So every company has the number of illness that they can cover. So usually when you take it out, you need to make sure what you are covered for and what you are not. So usually serious illness is added to your life cover and it pays out while you are ill. So we say that serious illness cover is to protect you whilst you are alive. So that then this will pay for you you not to work. So if you are covered for £10,000, then it will pay based on the severity of your illness. And it's not for like normal headache, like for serious illness, like those big names, cancer, stroke, and so on, heart attack. Those are the illness that it covers. And then, so the serious illness is to protect whilst you are here, and a life cover is to protect your family if you are not here with us. And then, so when I was doing my research, I found there was an article that I came across it, which was quite interesting. The same thing that Pastor Sweka was saying before we started is the life insurance in the Black community, especially the African community. So in 2008, there was a study that showed that the racial difference in the demand. Sorry. So it's found that white people had greater usage of life insurance than their Black counterparts. So so more white people get interview or mono, they said they will leave like a lump sum, a legacy for their children, but they realized that the Black people didn't even want to talk about death at all. And at the end of the day, we all, whilst we are alive, death is inevitable, but they didn't. Whilst their white counterpart wanted to find life insurance and invest for their children. And they found that the lower nets that's the more Black people, more lower income households are not using life insurance at all to protect themselves. Meanwhile, when you find this a white person who is also on a lower income, and you find that even though they are on a lower income, they are still protected. So we also found that during the pandemic, it was revealed that Black people were 4 times likely to die from the coronavirus. However, the life insurance claims from the Black community was the least, even though we were the ones dying. we were the least claiming life insurance because we were not properly protected. And then one of the things that we found is that a lot of the time, even though we take it out, we cancel it quickly because we do not see the value of the life insurance. Yeah, then we just cancel it. And it's also found that most of the times we are not aware. We don't know what life insurance is about. We don't understand it. And I thank God that Pastor has allowed us to be able to share all this information so that you will understand exactly what it is. So that, and you say, because you have taken out a life insurance, you're going to die, but it's because you want to protect and leave a legacy for your children. Amen.
Amen.
Say the crown, we're talking about we'll go to, maybe I should say, the government or the queen, or when we talk about the crown, it's technically the queen, but it just means that it's going to be owned by the United Kingdom or Great Britain. It's going to go into central reserves, maybe to help with the NHS or who knows, but it's just that the money will be lost once it's gone into the crown. That's it, it's gone. With probate, what happens is that once that person has passed, you then apply for probate. So there's the London Probate Service, or depending on where you reside, you have to apply for probate, and they will give you this document. They'll ask you to serve a death certificate. They'll ask you for all the information to prove that the person is truly dead, so that you're not trying to claim on somebody's house when maybe they've moved to Ghana, for example. So probate is the document that will then say, okay, this is the person who is certified to maybe distribute the wealth. The person has truly passed, and then it will give the document. So that grant of probate is what, for example, if you then needed to maybe go and tell the who is it, like maybe the mortgage company or the bank, that this person has died, so now you're the sole owner. It's the grant of probate that you would use to prove that, okay, you're allowed to distribute the wealth of XYZ, that they have truly passed and you're the right person. So without grant of probate, for example, you could have 4 children whose father has passed, and everybody's trying to go to the bank to say that, oh, my dad's passed. But without probate, they won't listen to you, they won't hear you. So the probate itself is given, you'd go to a lawyer and they would go and they would apply to the London Probate Service and get you that letter once you provide them the death certificate. So the probate itself doesn't come until the person has died. You can't get probate in advance because you need the death certificate to be able to get the probate.
Okay.
Once the person has died and you have all the you have the will to prove that you're the person who's listed to be distributing the assets, so you're the executor, and then you've got the death certificate and you have the will, then they'll grant you probate. And once you've got that, that's the document that you would use to go around to do all that you need to do.
If you're living with a wife or husband who is not legally married in UK, am I allowed to claim his or her pension after death? That's somebody's question.
When it comes to things like pension, life insurance, and things like that, you're able to you're able to nominate a beneficiary. So if you have nominated a beneficiary for your life insurance or for your pension in this regard, then it wouldn't matter that you're not legally married to the person. However, if there's no nominee for the pension and the person has been paying into a pension, there's no nominee, and then you don't have a will that says that the pension money should go to you, and you're not married to the person, then you have no claim. So it's very important that if you're not legally married to the person, that you have a will in place to pass the pension over to you, and that they nominate you as the beneficiary to the pension. Otherwise, maybe if the children, blood relatives, will have a claim over you. That's how I should put it.
Can a friend be listed as a guardian, please? From somebody's question for children, yeah.
So I think with legal guardianship, the choice is down to the parents. I don't know exactly what or after, because I said earlier that you can put some of these things in your will, but it's not necessarily the case that that's what will happen. For example, if at that particular time they're not in maybe a good accommodating area to be able to accommodate the children, then other things will be looked at. So you can put them in place, but it doesn't necessarily also mean that that's exactly what will happen. The welfare of the children will always be paramount, but it's just so that there's an indication of what your wishes are, and if possible they would do that. So I do believe you can list your friend as a guardian. But for example, if you prefer that they go to a friend rather than a family member and you don't list it, it's more likely that they'll let them go to a family member because they assume that they'd be safest with family. So
thank you. So like from the research you brought up, it is known that within the Black communities, they don't take life insurance at all, because I don't know whether it's a myth. If you take life insurance or you do well, you're going to die, that kind of thing. So they don't do at all and all that. And those who do it as well, as we know, after 3, 4, 5 months, this 20 pound cry, how much? Then they cancel it. Then they don't know. They've just canceled it. Then nobody kind of know. So I wanted to find out what advice can you give, and then what do you think will be what you've come across in terms of the barest minimum of minimum? Because something that if somebody's paying, it doesn't really cost them that much, but in future they realize that it was beneficial that they were doing it, if you know what I mean. In your experience as a broker, whichever way, what's the barest minimum? Let's say you can get a cover, let's say £5, can give you up to kind of this, up to kind of this, so that somebody, instead of spending, let's say, because we spend £40 a month on phones, £35 internet here and there, and then we ignore life insurance, which might be very important in future for us and maybe our children as well. So what advice?
So what we know is that the price that you pay is definitely based on how much you want to be left, how much you want to leave for your children. I know that there are some companies that do probably £5 a month, or sometimes it starts from £5 a month. But then there's a probability that if you are not, if you have children and you have, you are older in age, or you've had like a sickness in the past, it may be more expensive. But how much it costs all depends on, so you don't necessarily need to have like a higher amount. You can have like a small amount to leave behind for your children. And then that's what ensure that you're paying a minimum amount instead of a huge amount. But as you said, sometimes you put our priorities in the different places, like a phone. Some people keep their Netflix and then cancel their life insurance, which depends on you. You have to put priority on making sure, because we have been educated now. So you have to put priority on making sure that your children are protected, or your spouses are protected when you are no longer here.
Thank you.
My question is concerning the life insurance. I think it says most of the life insurance, they are among beneficiary forms. So, wait me, I feel it a bus how to share your money across. So, a part of the will. And maybe just say, part of the will insurance. I don't know. Is that allowed? So, or lawyer big copy, and I say you can keep the copy for yourself.
Okay, so with regards to life insurance, the insurance company will know and will have the details of the beneficiaries anyway. So if you so the real part is different. However, when you die, somebody has to inform the life insurance company. So whoever informs the life insurance, so you have to let maybe your closest people know that you have life insurance with X, Y, and Z company. So when they are informed, because you have given them the names of the beneficiaries, they will be able to give these particular beneficiaries the money. So, but I think, I'm not sure what Dick Nisela will say, but I don't know if he can also put it in your will as well.
I think just as you said, so you would put in the will that you have a life insurance policy with XYZ, so that the executor would know to inform them that you've passed. But if you have beneficiaries on your life insurance, the will cannot override that. So the beneficiaries in the life insurance is what would stand. I think where the complications come is if maybe those people that are listed, your nominees, have passed away, that's when maybe it can pass. But otherwise, you just inform them via the will, or sorry, your executor will inform them you know, that you've passed. So you just inform your family members via your will that you have a life insurance policy, how much it is and with who, and that's all that's required.
I mean, explaining. I think one of the other commission when Ella was talking about, so BT council flat for years. As we know, council flat, what council flat after 5-6 years, it's almost however, if you sell in the back, there's a lot of money you can get it. In as much as no can or say no, and yeah, but because of what now watch and a but na na sebi nisika kasa uto wankasa umoja nasa uto. So you are able to still do a way to say that I still want my children to have interest in this place. Into sebi under, that is when they're under 18, right? Or for any age.
For any age. I think if they're under 18, it's easier. If they're older, usually they just have to be able to prove that they live at the address or that, you know, they frequent the property, but it's for any age.
That's right. So it can also be a very good investment for Chimba in a way, because Ubetimato be at 40,000. Meanwhile, it's worth about, let's say, 150,000, 120,000. So Martina Huache. Now, but then you've done a simple way to say there's a 77 predators already from here, but some any interest in this place. Now, once you go ahead to say the young shepherd, it means that at least in a way, you have left something behind for the children in quote. And I think that's a highlight for what I've learned tonight. Somebody says, I know someone who canceled his life insurance because it was up to 80 years, and then if you are not diseased by then, you do another one. The person is 60 plus. He therefore stopped it, and he's putting money aside in private account. Is it safer? Okay, I don't know how to answer this question. So.
I think that if they're just putting money aside, because for example, if you are paying a premium of maybe £20 a month, and then you cancel it and you put it aside, it's not going to yield any benefits for the family, because £20 a month for 20 years will not yield any, unless maybe that person is trying to invest it into something. So you can also, so usually life insurance, probably you can take it to your retirement age, maybe when you are 60 something. And by then, if your children are away, you can then invest and put them into trust for your children in that way too. That is also advisable. But canceling it versus putting it in a private account, it will not be safe unless the person is investing it.
Concerning the cancel a flat as a bus be a show interest for your children and as a family member. Or not necessarily lawyer and a process, and I say you can go straight to the council to do that process.
And then I'll direct to the housing association and ask their council for her, and then you let them know, say you want to succeed the property succession. Into usually you don't need to involve any solicitor, but then you can seek the advice of a solicitor to help you to fight the case. But initially you can just go to them directly.
Okay, thank you.
Because in regards to the will, if I and my husband are legally married with the Italian law, and due to document purpose, we are having difference in when one died, what happened to our asset? Oh, so surname. Okay, all right. Dickness Ella.
Okay,
so they are legally married, but they have separate names.
Yeah. If you're legally married, and you have separate names, I mean, even if you're legally married with the same name, usually they would ask you to provide proof of a marriage certificate, because if you have the same names, it could be your brother or anything. So they'd ask you to provide a marriage certificate to prove that, you know, you are legally married, and then that should be enough for that.
Okay, then he's saying that different surname, actually, different surname. Does it really matter? So
No, so
maybe
so long as
just, yeah.
you've opted not to use your marriage name and you're using your maiden name, it shouldn't be a problem. But you'd have to have the proof on the marriage certificate showing that it is you. Or if you've changed your name, then deed poll documentation and all of those kind of things would help you to do that.
Wow. And then somebody said, is it necessarily a requirement to get witness to your will?
Yes, please. Very important. So you need 2 witnesses to witness your will or to sign that they've witnessed your will. And the 2 people should not be connected or related to the people who are written in the will. So if you don't have that, then it makes the will invalid. And it means that even if you have a will, if it's invalid, then you go back to like somebody who didn't have a will at all. So it's important that you have 2 witnesses to sign, and then that those witnesses are not related to any of the beneficiaries, any of the people who are listed inside the will. Thank you.
Pacho say Obi or life insurance says 70 years and that's 80 years. That's the Babe Swan. That's the still any panel. Namia dum table that's what yes, that's Babe Swan. I advise not be many panel.
Sorry, particular last part, Nibio.
Say Obi are your life insurance if I 60 and I say 70. Not a Babe Swan. I did advise not be many panel because as soon as you swan.
So usually, the purpose of life insurance, I would say is to protect your family and then your children. So we are hoping that by the time I will be 70, they are not dependent on you. So because at the age of 70, if you want to take another life insurance, it may be very expensive. So maybe at the age of 70, when your life insurance is about to, then you may possibly take out a funeral plan cover or something. So that one is a little bit cheaper. But life insurance, it doesn't have a cash value at the end. So by the time, unless you take a whole life cover, which would cover you for the rest of your life. But for life insurance, with the 70, you can possibly take another one to cover you further. But then because of your age, they will be quite expensive. So the earlier you take it, the better. But then at the age of 70, if your children are grown and they are not dependent on you, then maybe the only thing that you would want to help them with is the funeral cover. So that's like you don't leave them a car at the end of the day as well. So that's what I would advise.
Sometimes people might be 70, but they still have very young children, because sometimes maybe birth didn't happen earlier in life. So he might be 70, but or let's say a 12-year-old, a 13-year-old, and they're still in school and all that. So life insurance as against, let's say, in code funeral insurance, which one might be, can he continue? How would he pay into such?
That person, the baby, it would be advisable for that person to have like a whole life cover then. So the whole life cover, it guarantees a payment at any age that you die. It's just that it's a little bit expensive, but when you compare the benefits that you leave for your children, because the children are very young, then it's possible to get a whole life cover. So that is what will be able to help them. So we always we talk about how life really works in our company. So we try to advise you that as you are we call something the renting wealth. Renting wealth is the life insurance, and then accumulating wealth is the investment. So we are hoping that as you are paying for your life insurance, which is maybe £20 a month, then you're also accumulating wealth by paying into your pension, investing, so that by the age of 17, even if your life insurance ends, then you have like an investment stock for the children that you are leaving. But if you don't have an investment at the age of 70 that you think that it can cover Umbano, then you can take a whole life cover, which guarantees a payment at the end of your life. So that's our advice, either you invest or you take out a whole life insurance.
Right. Where is the place of trust in a will? I don't understand this one. So, Ella.
Okay. So we have trusts, and then we have wills, and then we have will trusts. And I think the easiest way for me to explain it is that when you have a will, the assets that you're transferring, they transfer when you die. But with a trust, you can transfer the assets whilst you're still alive. So it would be a lot of detail to go into, but there are various benefits depending on, you know, how or the what your assets are worth, maybe tax implications to pass it on. But it's in a sense, you're just passing the responsibility over maybe your assets to your children and whilst you're alive. But if they're under 18, for example, and they can't own it legally at that age, it goes into a trust and it's managed. So long or short, you can have a trust or a will. You can have a will trust. They do the same thing, but it would just depend on the kind of assets that you have. And then the benefits would, you'd have to determine the benefits. So if you want a will trust, I'd say that you speak with a solicitor and they can tell you which would be best for your personal situation.
Thank you. So what happens at age 70 and you don't want a funeral cover? Can the person make claims for the money contributed or invested? So I think, yeah, Sarah.
Okay, so life insurance, the term life insurance works like a car insurance. You are paying to ensure that when you pass away, so when you have a car insurance, it doesn't have a cash value. You cannot go at the end of the year and say that I've paid 100,000, so give it back to me. No. So you are paying to protect yourself in case of any eventuality. So when you get to 70 and your life insurance, you don't want to continue your life insurance, or your life insurance has ended. And if you don't, that means that the cash, there's no cash value, so it has expired. Do you get it? So it has expired. So you don't get a cash value at the end of your term. So you had 30 years. At the end of term, there's no cash value at the end of the term. But it's just a way to ensure that should you die within that term, your family will get the money that you want them to have. So I will stress it again. It is important that as you are paying your life insurance, you also invest. The last time Pastor brought an elder to teach us about investment. So you invest so that your children will have, so when you die within that term, they will get the life insurance money. But if God blesses you and you don't die within that term, then you're also not worried because you're also investing. So you're able to leave something also for your children. So that's how it should be in balance. So unless you want to do, again, the whole life cover, because that one is very expensive, but that guarantees a payout when you die.
Okay.
Yeah, I hope that's
I
clear.
think these questions are very eye-opening as well. Thank you so much again, because again, it's not prescriptive as we are mentioning. I think there's also a stigma in the African context about these funeral plans or funeral covers and all that. And so somebody gets to 70, then his life insurance has ceased. He's not paying again. Then he's left it in vacuum, but he's going to live, let's say, to 100. We always pray for long life anyway. So we're going to live over 100 and everything. But it doesn't matter whichever way it comes. Funerals are expensive in this country as it is. I don't know why it's so expensive here. The land you buy and all that and everything. By the time you finish one cycle of funeral, 15,000, 10,000, sometimes it become a big burden on families when they are not prepared. And so I think this advice is not prescriptive like we mentioned, but just information that's getting out there. Obi ambo modern say obe hwehwemu ne ebeboa onene na ebusua no, and then you try to do. But I'm much particular concerned about say yemu bebre no, we have lived very well in Europe near there, and then obviously we have assets back home near there, and then yambanso your first, second generation here almost need interest back home one way or the other. And my concern mainly is how to connect what we have so that in future, because this is, I'm selling houses in Ghana and other places also in quote, no, but how do they be able to connect? Let's say, for example, I pass on and then I have something, my children are British born green, they don't know anything in Ghana, but dad has done a will. Where do they start? Do they go to the British High Commission or British Embassy in Ghana, or to say that, look, my dad was a British, blah, blah. How do you do that? Ella, that's the final question maybe, because that's very important to me personally.
I think it really, really depends on the country. So it will depend on the
Yeah.
systems that they have in place in Ghana, maybe to be able to check. For example, over here, if a family member dies, you can write to the probate services. They will check and see if probate has been granted to somebody. They'll give you information on their will and all of those kind of things. I'm not sure if we have that kind of extensive service in Ghana. But for a start, you can put in the will that you have something in Ghana that you want them to look at. I would just advise that you wouldn't maybe distribute the wealth in the UK will, you would do that in a Ghanaian will. So just something to tell them that they need to go to Ghana to go and, you know, maybe this particular firm to go. And then when they go there, that firm will also have all the details. That would probably be the best way that I could maybe encourage us to do.
Thank you. Thank you. I think our time is almost gone. On that note, we want to say a very big thank you again to our lovely ladies. It's wonderful. Dickness Ella Asante, God bless you so much for bringing your wealth of knowledge to us. God bless you, lady. Everybody is saying God bless you. Thank you so much. And Dickness Sarah as well.